Hello and welcome to this Lunch and Learn workshop with KPMG High Growth Ventures on R&D, tax incentives, as well as the grant opportunities for you. So it's a really great time of year to get the intel, the insights and information. Now, before I hand over to the amazing Kylie to run this session, I'd like to acknowledge the traditional owners of the land of which we meet. For me, that's the Gubbi Gubbi people, Wanya Nullum, which is welcome. And I pay my respects to their elders past, present, and joining us today on the call, and honour their continuous connection to country, land and sea, and recognise First Nations people as the original climate tech innovators of this great country of ours. Kylie, I'm handing over to you now.
Great, thanks Charlotte. So welcome everyone to our latest session on all things R&D grants. I think we're all getting a bit used to each other now. I think this is our fourth or fifth. As for those that are new, these sessions are designed to really help you access all the rich expertise that we have across KPMG and really be able to help you grow and scale your businesses. We're seeing a lot of familiar names now, which is really, really nice. But for those that don't know us and don't know the High Growth Ventures team at KPMG, we are really focused on connecting founders and their teams to the services in KPMG that can help you grow sustainably, saving you time and money. So we work across services for startups at price points tailored to the different stages of growth that you might all be at, across areas like bookkeeping, finance, tax structuring, R&D and government incentive, obviously what we're talking about today, just to name a few, and we don't do other things as well. So if people do want to know more about that, you're welcome to just reach out to me and I can get you to the right people in the business to find out more. As you know, these sessions are really about you guys asking questions. So feel free to post your questions throughout the session. We're seeing a lot of demand in this sort of non-dilutive space, funding space, more because, the VC market has been so challenging over the last sort of, 12 to 18 months. And more people are trying to work out how can you actually complement sort of additional funding with these sort of non-dilutive options. So this month, we're really sort of giving you access to these really amazing, experienced people across our business who've been doing this for a really long time. I was going to put a number of years, but you look too young for those number of years, you two, so I'm just not going to say anything. But a very warm welcome to Alan Needham, who heads up our KPMG's National Grants team, and Nicole Tucker from our Accelerating Business Growth practice. I'm going to hand over to you guys to introduce yourself. So I'll go with you first, Alan, to just give a bit of a background on your experience here at KPMG.
Thank you, Kylie, and thank you for the opportunity to speak today. Yes, it's fair to say I have been in the government incentives area for quite a while. I commenced my career actually at Oz Industry, so I was on the program administration side, but have been in the professional services area for quite a long time. I head up our national grants practice. I work across R&D tax. I work with startups through to large organisations, working across various industry sectors, but a lot in this space. And there are fundamentally three things that we do. We're looking to raise awareness of funding opportunities, to provide insights into programs, and then help companies actually apply. So yeah, really looking forward to the discussion.
Right, and Nicole, I'll hand over to you.
Thanks, guys. Can you hear me?
Yep, you're all good.
Wonderful. I was having some tech problems before. Hi, everyone. I'm Nicole Tucker. I'm a director in our Brisbane office. I originally started my career as an environmental scientist. I was a national parks ranger and worked in Queensland, wandering around the national parks and also out the Great Barrier Reef, and an environmental scientist. But that was back in the days where it was very hard to get a permanent position when environment was not in vogue. So I'm really pleased to see the direction of climate tech these days. So I changed my career and became a chartered accountant, tax advisor. I've worked all over the world in many countries and have been with KPMG for quite a while. So now I'm working in especially R&D, tax, and also helping with grants as well as other business and tax advice and ESG advisory. So lots of things to keep me busy. So looking forward to talking with you all.
Great, thanks, Nicole. So welcome to both of you and welcome everyone on the call. So we're just going to kick off with some sort of general questions really to give people a bit of a background. And at the same time, Charlotte obviously is putting up a few polls just so we can get a bit of a sense of who's on the call, what's sort of the knowledge base that's out there at the moment to help tailor that for Alan and Nicole. But obviously, as we go through, ask your questions and we can get to those as we go along. But if to kick off with you, Alan, it'd be just interesting to understand from you any insights you've got. I mean, obviously we've got a lot of sort of change, you know, at a federal level and New South Wales level in terms of government funding support, and we're seeing a lot of flux at the moment. Do you have any sort of insights in sort of, you know, the shifts in approach to grants and incentives that we're seeing coming through, or what are the insights you guys are seeing?
Yeah, right. So like interestingly, and probably in a positive sense, there was no movement on the R&D tax front. So, you know, the R&D tax incentive had been subject to some level of change and review and revision in recent years, but this is one of the first years where we sat there and had nothing to report on budget night because there was no movement at all. So we'll take that as a positive, and certainly to this audience as well. So the refundable is still there, and
Oh, we lost your audio.
Oh, all right, I'll press on. Yes, so from a grants perspective, obviously it's been an interesting time with the change of federal government. As is usually the case, there is a period of review and revision. And, you know, we've seen that, I suppose, with the federal government announcing, obviously, the very significant National Reconstruction Fund, which we'll expand on a little later. But what we did see coming through from this federal budget is the announcement of the closure of the Entrepreneurs Program, and then the emergence of the new Industry Growth Program. So that's about a $392 million program, which will run over 4 years and will open, we understand, in around September. Now, the important thing, I think, with the Industry Growth Program is that it is closely aligned with the federal government's priority and critical technology areas. And, you know, clean energy generation does certainly fit under that. And what they've also done as well is to say that there will be a transition, or a hopeful transition, of good research coming out, being supported through a program like Industry Growth Program, and then potentially creating projects and businesses that are suitable for National Reconstruction Fund support. So I think there's been a more conscious effort to align the program, so you can pass from one, and so you might access R&D tax in the early days, move through Industry Growth Program, and then potentially align the business for an investment through the National Reconstruction Fund. The other thing, I suppose, just in relation to like the National Reconstruction Fund, and we're seeing this in Victoria and elsewhere, is a move away from grants and to support through equity investments or concessional loans or warranties or other forms of non-grant funding. So that is a significant change. It's sort of been happening over the last probably 2 to 3 to 4 years in various areas. But I think, you know, certainly a National Reconstruction Fund at $15 billion is a very significant fund, and obviously a very significant move away from the grant approach.
Great. And Nicole, there's clearly a much needed shift into sort of clean energy and climate. You know, what are you seeing in terms of those areas that you expect to see continued support or renewed support? Is there anything else you'd add?
I think probably, as Alan had mentioned, energy, definitely, critical minerals and processing. There is support for medical products, if that's an area, recycling, clean energy, defense and space. I kind of look at this with an ESG lens as well. So it's all about kind of technology and environment there. But what I'm also seeing is some in that social space. So a bit of Indigenous inclusion programs, regional growth programs, education and skills are still being supported. Exporting into Asia rather than exporting anywhere seems to be a bit of a shift. So those programs are still there. So it's not all focused on energy and climate, but definitely a huge focus in that space. Yeah. So it's an interesting transition. I think it's more focused, is where I'd say, than it has been in the past, rather than general grant programs.
And do you see that as a good thing?
I do. Yeah, I do. I think if your business isn't in an area that's going to help the environment or grow or help people, then there's a question around purpose that is really interesting to answer around your purpose of your business. So the fact that these particular areas are focused on that, I think, helps a lot of businesses define their purpose and, their reason for being.
Yeah, right.
Okay. Kylie, can I just add to that?
Yeah, absolutely.
I think in terms of from a sector perspective, I mean, now I think there is a stronger focus, both at the state and federal level, to prioritise certain, energy areas. Now, obviously, as I think most of this audience fit within the right bucket or one of the right buckets, so that's fantastic. And I think that's been an ongoing sort of philosophical debate as to whether government should provide just broad support. So, like, fundamentally, if you look at the Accelerating Commercialisation program, that was fairly broadly based from a technology perspective. Whereas now they're saying with the new industry growth program, it will be, you will need to align with the 7 critical sort of technology areas to basically be offered support. So if you're in the right place, well, that's fantastic. Otherwise, it makes it challenging.
Yeah. And what are you guys seeing like at a state level? I think when we did the poll, and apologies ACT, that wasn't in the poll. I think, we saw the bulk in sort of New South Wales, Vic, Queensland, which, is common. But, do you see anything sort of state-based? I guess you guys, Alan, you're Vic, Nicole, you're Queensland. New South Wales is in flux at the moment anyway, because we're sort of waiting to see what next. But where are you seeing if there's sort of different approaches or how the different states are seeing this?
Well, can I just comment first? And I just want to actually just read out a quote. Unfortunately, in New South Wales, obviously with the change of government, our clients are receiving wording to the effect that, it's standard practice to re-establish the authorising environment on policies, programs or decisions made by a previous government. Now, that has meant that there are a number of programs in New South Wales now that are on hold, where applications are at various stages of being either lodged or being reviewed. And in fact, there was a submitted question about alignment of project commencement dates with funding. This does cause immense frustration, I think, with companies. I mean, you need to be in the right place at the right time with a project for funding, but then to have the added complication, obviously, when there is a change of government, there's a review. I think it does reflect a level of perhaps some cynicism around grant programs. I think we saw nationally, probably after in relation to the last government, where there was a level of utilisation or perhaps manipulation of programs for particular political outcomes. And I think even to the extent that we're moving away from grants in some instances to different forms of investment, reflect the concern or wariness that some governments may have in relation to providing grants as a form of funding.
And just a quick question from Thomas in here, like he's saying, I guess just to clarify that sort of equity funding, if the government is moving away from grant funding and taking equity, what would be the advantage compared with taking more money from investors? Who sets the valuation? As I see it in the startup space, if we're getting even less competitive with the US and EU with that move.
Yeah, I think it's an interesting one, and particularly the Federal Minister Husick is a big fan of this approach of sharing the risk. I think the intent is to invest in higher risk entities. And I know if I can talk to the Breakthrough Victoria Fund, which has been active now for probably 12 months or so, the intent is not to lead an investment. It doesn't want to distort the market. It does want to invest in projects that are relatively higher risk. And so to provide some momentum, I suppose, and also to invest in projects that are transformative from a state perspective in that instance. And something that's highly novel. Look, it's an interesting play. I mean, clearly NRF at $15 billion is significant, but they're looking to leverage and just to encourage more translation of good research into the market. And the valuation, well, look, it's an interesting point. I think in terms of not leading, I mean, they will be a participant in the process. And we assume that's how NRF will operate, similar to how Breakthrough Victoria does. NRF is subject to consultation at the moment and won't open until the beginning of next financial year, which is obviously not far off, but we'll see how it plays out.
Okay, and just interesting on the poll earlier, it looks like sort of the people accessing R&D and grants is sort of a flip. So 35% of people have said they have accessed R&D and 65% have not. And then in the grant space, 65% have accessed grants and 35% not. So just for context in terms of the experience on the call. So maybe thinking, if we start with grants, Alan, just thinking about the process, like how you think about the process of applying for a grant and how you go through that.
Yeah, fantastic. Look, I mean, applying for a grant's no different to pitching for any other investment. I mean, fundamentally, we've worked across dozens of grant programs. I mean, fundamentally, it's about who are you, and what do you bring to the table? What is the opportunity? What else exists effectively in the market? What's your ability to deliver? what might be the impact of government funding, and obviously relatedly, what's your need for funding, and broadly, sort of economic benefits. So I think, being mindful of those general principles or areas that they look to cover. I mean, you're telling a good story. And as I mentioned before, I think you need to be in the right place at the right time. I mean, one of the areas that we see is people trying to tell the same story for different funding purposes. And whilst the basis or the solid foundation of that story is obviously going to be the same, I think you need to be very mindful of the various or the different policies that then come down to then determine what the program looks like. So, I think you have to be very clear as to, well, okay, what is the government looking to fund? Look to previous investments through previous funding rounds. I think that's important. And then looking through the merit criteria. So in many instances, and the big distinction, of course, is that grants are both eligibility and competitiveness, whereas obviously R&D tax is just eligibility. So it's the competitiveness piece. And I'd also encourage all applicants, to the extent that you can, to engage with the funding body prior to submission, or to work with someone like us, for instance, to help in that qualification of the opportunity and to help you assess your competitiveness.
Great. And Nicole, I know that we've worked on quite a few recently, which has been great for you in the biodiversity space, but people that actually have experience in applying for grants, but I guess it's probably interesting to understand like the amount of effort that goes into this, and where we're seeing people that still come to us even though they've got experience, like what is the value add on your end, and what does it take to actually get this across the line?
Yeah, it can be deceptively involved with a grant. Often grants open very quickly. They might be open for 4 weeks and closed and done, and they may not come again. So readiness about what your project looks like is so critical. Having, even before a grant opens, and having a sense of what's coming up is really critical. A small grant that might be $500,000 to $1 million still might take a founder out of their regular business for a week or two, hands-on writing things that the grant might require. A very large grant, multiple millions, will require a whole bunch of documents. It might be anything from financial models to economic impact statements to risks, all of these other things that the grant might require, which could take absolute, a month or two to do. So having a team that you can outsource as a founder to get people to do those things for the big ones is absolutely critical. But when I think about readiness, I know we've talked to many businesses and founders who aren't even sure how to define what their project is. Like when they say, what project are you going to put up for a grant? Here's one. They're not quite sure how to define it. So having thought through, what your project is and defining it in your own mind, having a sense of your budget, having a sense of the benefits and the risks that might be involved, having talked to any project partners before a grant opens and having some in-principle agreement, that all takes time before the grant even opens. And also socializing your project to whomever might be a decision maker is something that all takes time before a grant even opens, and then you actually just have to sit and write the grant. So having a team to help you do all that is really good in terms of making your chance a lot better at actually receiving money.
Yeah, and Adam, that readiness, Alan, sorry, the readiness piece, just changing your name mid-call, don't mind me. So in terms of readiness, how do you guys think about that? And I know that I've seen you guys actually say to someone, probably don't apply for this one because it's not going to make sense for you. I guess it'd be interesting to get your take on that as well, like when we would say maybe you shouldn't apply for this one.
Yeah, sure. And I just wanted to pick up, Nicole mentioned small grants of 500,000. I mean, we have clients that apply for 50,000, and obviously in New South Wales, we've had the MVBV program now on hold, but, small amounts as well. So, working out what the funding landscape is, I think goes a long way to then helping you be more prepared and better ready or more ready for an application. We have seen in recent times that in many instances, some of these programs are opening up and you're getting maybe 4 to 6 weeks to apply. And some of the programs don't have a, 2-stage expression of interest and full application process. So you really, as Nick said, you really do need to be very well prepared. I think, as I sort of indicated before, having a strong alignment with the policy intent, and then obviously the eligibility and the merit criteria. So, you can't shove that square peg into a round hole. It's just not going to work, you know. And the extent to which you can further qualify the opportunity through, you know, a good review of the guidelines, looking at previously funded recipients, talking to the department, talking to advisors, talking to whoever, you know, is really, really important, you know, because you can't, you know, you don't want to waste your own time. And you know, we've spoken to a number of companies that have applied numerous times unsuccessfully. And I suppose to your point around, well, when do you don't apply? Well, I think having some sense as to competitiveness. So if you know, and we know some, for instance, some manufacturing funds in the past have had literally, 1,000 applicants in total, and they fund, you know, let's say maybe 10%. So maybe most programs, they probably fund 5 to 10% of all applications. So be realistic. You may think you have a highly competitive application, and you've gone through all those steps to qualify, but you know, you might be able to slightly improve your chances, but you've still, you know, maybe 10 to 20%, you know, get up. I think also from a timing perspective, so that point I made before, that's one of the major issues, because in many instances, you know, expenditure only becomes eligible from the point at which you sign the funding agreement. And there are some variations, and in fact, accelerating commercialisation was when you lodge your final application, so that was earlier. But you just need to be mindful of the fact of, when does your project need to start? When does it need to finish? And then obviously, how does that align with the program? So you've got to get everything sort of lined up. And as Nick said as well before, if it's a collaborative program, because government loves collaboration, and which is, you know, positive, you need to have your partners lined up. You need to have, you know, tech transfer, IP agreements, all those sorts of things lined up, so that you're actually, you know, in a position then to kick off when the round opens.
Yep. Okay, great. And then Nick, like any thoughts around sort of like any sort of flow-on effects from grant funding, like, you know, reporting, and any implications? What sort of things like come after the fact?
Yeah, and it's a good point. I think you have to be realistic. You are using taxpayers' money. Wonderful, you've gone through the whole thing, you've got your grant, you've got it, and then of course you're going to have to expect there's going to be milestone reporting to get tranches of funding coming in. So there is a reporting and a compliance piece to it. So milestone reporting or progress reports need to happen. Usually there's a final report on what you've done with the money, and usually some of that money will depend on actually that final report coming in. Quite often there's an ask around a bit of an audit of the funds that you've used. So there is, again, that compliance and regulation. That is from the side of the grant, but also getting a grant, there's actually impacts on if you are also claiming R&D tax. So generally you can't double dip on government funding. So if you're getting a benefit through R&D tax, you're also getting a benefit through a grant. It's for the same project. There's a lot of complexity in that about, you know, what you can claim, and you also don't want to be in a position that you've had both, and you actually have to give the ATO back some money. So even after you've got the grant, there's a lot to think about in terms of, you know, that flow-on effect. And the final point I did want to make, if you actually go for a grant but you don't get it, there's actually a flow-on effect from that, because what it's forced you to do, which maybe you haven't done before, is in a really short period of time figure out and put your mind to a project that you'd kind of been kicking around a bit, but you've actually got some collateral from the end of a grant funding process that you didn't get, that you could reuse or rethink about or refine. And so there's still a benefit of going through that process even if you don't get the funding.
Yeah, that's actually a really interesting point, Nick, because that sometimes that deadline, that push is really good for honing your thinking.
And Kylie, can I just add a couple of thoughts? Other implications. So for some of the programs like AC, for instance, in the past, and it will continue probably with the industry growth program, if there's a change of ownership in the intellectual property or dealings with the IP. So if you dispose of IP, or if there's a change of control of the company as well. So, you know, ultimately this is all around preserving a level of national benefit. And I guess if the government, state or federal, has funded a project, and then you decide at the end of it, with whatever the results are, is to do something with them, you need to keep the department informed. And it's not to say there will be an adverse outcome. In some instances, you may need to pay some of the grant back. But you need to be aware that there are those contractual terms that you need to comply with. The other one is that some of the programs in the past have funded on a job creation basis. And so the number of jobs created that you map out at the start will dictate how much you receive. And of course, at the end of the project, there'll be an assessment, or just shortly thereafter, there'll be some assessment as to, in fact, how many good jobs you actually have created. And so funding could be wound back, you know, depending on what the outcome is. So you need to be very clear. And one of the first things you probably should do is always, and there is always a sample agreement, funding agreement on the website for the funding program. Have a look at that and make sure you're comfortable with it. We have had companies actually not take up offers because ultimately they've not been happy with the terms of the agreement. So, you know, look over that first, make sure you're comfortable with that, obviously, before getting into the process.
Okay, great. And just a quick one, because we're about to jump into R&D, but just someone's actually, Lee Lubin has asked you a question. Can we come back to the New South Wales MVP grant with the program being on hold, but many applications submitted and in processing? Do you have any insights and predictions for what happens next and when?
Yeah, it's going to be, and we have a number, I think collectively our Sydney team put together, I think about 30 applications, all at various stages. So we've had some dealings with the program manager just, in fact, this morning. I won't endeavour to bring that up, but look, they're going to go through the process. It may take a little while. I would be surprised if they don't ultimately honour the program, and I think they will continue to, you know, review the applications and hopefully fund them. I mean, there was just a wealth of, you know, there was a whole lot of a burst of activity from the previous New South Wales government, which we thought was wonderful in terms of innovation and other clean tech and a range of other programs. So it was very positive. So I'm not surprised there's been a level of review, but my hope is that it will take a little while, which is unfortunate, but you know, ultimately it should be honoured, is my hope. The other one, can I just expand on the industry growth program if we have a little bit of time? So we've had some discussions with the department. The sense is that it will be very much like accelerating commercialisation. There will be external facilitators appointed. So if anyone's been through AC, you'll know that there are people with, you know, considerable industry experience that play a facilitation role. The good news is that the maximum grant has been increased from $1 million to $5 million, which is obviously very significant. So grants now $50,000 to $5 million on a dollar-for-dollar basis. Some of the budget will be used for advisory services, which is similar to Entrepreneurs Program, but then there'll be a significant grant component. So, and again, you know, this sector is one that's going to be supported strongly through the program as well. So I think it's a significant opportunity. It will be highly competitive, I think, given the maximum grant of $5 million. There's going to be a bit of a rush, I suggest. The other thing I wanted to say was that AC supported early stage commercialisation projects. So in that sort of valley of death, you've done your R&D, looking to commercialise, lack funds. Here, industry growth programs actually going to support growth and scale up activity as well. So, and it may well be, if it's like AC, you may be able to apply for an amount to support early stage commercialisation. There's a potential to go back and apply for more to effectively support some later stage, you know, scale up activity. So I think the scope, you know, it sounds good, and obviously some significant funds that'll be available. Again, it will be highly competitive, but hopefully there'll be a process, you know, an expression of interest type approach. So that will help, you know, qualify opportunities.
Okay, great. Okay, so just so if we jump into R&D, so obviously in the poll, it looks like only 35% of people are accessing R&D at the moment. So that's sort of a big chunk that may not be, which may not mean they don't know anything about it. It might just might mean they're not accessing it. So we might just sort of go through a bit of sort of nuts and bolts on how R&D works and what sort of companies qualify to start with, and just work through just an understanding of it. And as people have more questions, feel free to throw them in, but we'll just sort of do that basics first. So Nicole, do you want to run through that?
I do. I was going to share a screen, but I'm not sure if I can do it on Zoom. I think I can. I sound like the little engine that could. Here we go.
Yeah.
That's right. Yeah, should be able to.
Let me know if you can see anything at all.
It's saying you're sharing, but it's not popping up yet.
Yeah, that's what I'm seeing as well. I might just have to talk to it.
Okay.
Okay. Yeah, I'll give up already. Stop sharing.
No,
so
it just came up.
Did it? I'll try it again. I'll try it again quickly while I talk to it. So who can apply? Companies. basically, if you're an incorporated company, you can apply for R&D tax. It's something that actually is part of your income tax return. That's kind of the method of how R&D tax actually even gives you a benefit. So if you're a company, you can. Trusts can't. Partnerships, of course, can't, because they're not really an entity in themselves. So I'd say, you know, if you're incorporated and you're running this company and you're doing a tax return every year, you qualify for R&D tax in terms of who you are. Do let me know if anything is coming up yet.
Yes, there, we've got it.
Yep, it's there.
Wonderful. This is just a little snapshot as to what the program's about. So it's for companies. It is actually it's not competitive. So if you are doing R&D that actually is eligible according to the R&D tax legislation, you qualify to get this benefit. So it's definitely one to look into if you haven't already, because it is something that is quite a valuable tax benefit. So I'm going to assume that everybody on this call is probably a company that's got a turnover under 20 million. Let's go for that. So what does that mean for you? So if you are doing R&D tax activities, you've got a project that requires some research and development. Say you spend, this says $1 million, for example, on your R&D project. You're a small company, maybe you're not creating any revenue at the moment, so you're pre-revenue, and you put in your tax return at the end of the year without R&D, and all you've got is tax losses. If you had a $1 million project and you claim the R&D tax benefit on it, what it would do is give you a cash refund of $435,000 back into your bank for the year, and that tends to fund you for the next year. So for early stage businesses, R&D tax is critical, and it is used very much year on year until companies start to scale. And once they get to a much larger stage, then they move into this larger company non-refundable offset area, where you're probably tax paying by that stage. You're doing well, and the R&D then helps, the R&D offset helps to reduce the tax that you pay. So that's a bit of an overview of who it is and what it is. There's legislation around what kind of thing actually qualifies as an R&D activity. So the legislation defines it, but generally, if you are doing a new process, a new methodology, a new service, a new product, something that requires experimentation, you might have an idea, you can't figure out how to solve your idea through publicly available information, forums, talking to experts, and you need to go ahead and do a bit of experimentation. That's generally an activity that does qualify. It needs to create new knowledge, and it needs to go through a fairly scientific process. I've got an idea. It's called a hypothesis in the terms here. I have to do a bunch of experiments, trials, designs, figuring out how to do it. It may or may not succeed. That's fine. Your R&D doesn't have to succeed. It could fail, and you can still claim the benefit. And it creates new knowledge. So that is the crux of what R&D tax is about.
And Nick, to add to that, the program does fundamentally support technological advancements. So there needs to be some technology basis to what you're claiming. So it doesn't to this point, and there aren't programs overseas that fundamentally support non-technology based, I suppose, innovations.
Yeah, so like social research and things, it doesn't really.
Yeah, correct.
But anything technological, it will.
So exactly right.
And then just quickly, there was a question that just popped up asking, if there's activities that need to be like R&D sort of research activities that need to be carried out overseas, does any of that apply?
It can do. So generally, the R&D tax program will look at what's happening within Australia and help you fund that. But if there is a reason that you can't do it within Australia, the experts are overseas, the population you're studying is overseas, the facility you need is overseas, something like that, what you can do is actually ask AusIndustry. There's a form that you go through called an overseas finding. You say, AusIndustry, is it all right if, these are the reasons why I have to do it overseas? They look through and go, okay, yeah, that's fine. There's quite a few rules around how you have to structure it, but you can actually get overseas or offshore activities and costs into your claim if you plan it right. You want to do that, and we're going to talk to timing. You want to do that before the end of your financial year where those activities are happening. So, for example, if you've got a June 30, 2023 financial year and you've got some things happening overseas, you'd want to actually get your finding into AusIndustry before June 30 this year. to actually say, for the last 12 months, can I have that cost in?
Okay.
Go ahead. I was going to say, if you do get a finding, though, it can actually last for 3 years at least. So it doesn't have to be an annual bit of compliance that you have to do.
Okay. Another quick question: would market testing for new services, not products, qualify for R&D?
It depends what you're testing for. If you're trying to test around how your product will be received in the market, like will it be successful or not, that's not really the purpose of the program. That's more about it's sales focus, really. But if the market testing is more about the technological side of that, like will it functionally work as part of your design process, then potentially yes.
Okay, and then there's the two types of R&D, so core and supporting. What's the difference between those?
Yeah, so core R&D is purely that it's the experiment. It's the guts of what you're doing. It's the heart of it.
Mm-hmm.
But you might have to do a bunch of other things to help your experiment happen. So, some literature reviews to start off with, and figuring out how to actually go about doing your R&D at the front end. That can be considered a supporting activity because you couldn't actually do your core activity without it. You might do, various other activities during, like you might have to set up your experiment, clean up your experiment. You might have to do some research that kind of helps you design your experiment in the first place. All of these other things they're not the core of it, but they need to happen
Mm-hmm.
for you to actually undertake your R&D. So there's lots of different types of support activities. One thing to be careful of is, what's the purpose of your support activity? Is it for your R&D project, or is it for your business at large? So there is something around dominant purpose that you need to be aware of if you're doing your R&D in a very commercial space. Like, what is the purpose of what you're doing? So, but the key thing around these activities, and I'd say if you're looking at claiming, is firstly knowing that you're doing R&D, keeping great documents at the time you're doing it or in advance of what you're doing it. So contemporaneous documentation to say, this is my core activity. I need to do some support activities. I've got, snapshots of me doing research, and I've got different types of forms or emails or reports that I've got at the time. Everything hinges on being able to prove that you're doing it at the time. So I think that is the crux of what is really helps you to be eligible for this program.
Okay, and that record keeping piece, that's interesting, because I know that one of the things we've come across a few times is people trying to sort of backfill that because they're now either going to a funding cycle or they have an exit opportunity, but they haven't actually documented this properly, and it becomes an issue. And do you think people underestimate the importance of record keeping because this is such a voluntary scheme?
100%. Yeah. You have to remember that the R&D tax program is part of tax. So it's effectively you get money back through the ATO. So same as with any other tax you do, even your own personal tax, you need to keep records. Your business needs to keep the records for tax. This is part of that. So it must be record driven and record supported. And you can get yourself into trouble if you don't have records and you go about going, say, I've been doing R&D, but it's hard to prove that you haven't been doing R&D if you don't have records, and it's a lot harder to prove that you haven't been doing R&D if you do have records and thought at the time you were actually doing it. So having records is absolutely critical.
Yeah, great.
Can I, sorry, Carl, if I can just add some comments to that. I think having had some clients go through an ATO review, understanding that the ATO's position is that they want to be able, they need you to be able to identify when you've claimed $1, what's the activity that dollar relates to? And it is quite a fine level of detail, and they are very particular about that. So, I mean, our view is that effectively, for good business practices, we hope that you have appropriate, I suppose, records in place and processes and systems, to track what you're doing. Because much of the data that you'll need for an R&D claim should obviously come out of your system. So, as Nick said, being able to confirm that, yes, I have actually undertaken an R&D project with a number of supporting and core activities in. I do know what I've spent on those. And the thing is that, most clients, well, if not all businesses, consider projects and not activities. Yes, we require you to go that next step and think in terms of activities that make up that project. So, in terms of your record keeping, you probably do need to up the ante a little bit to have that finer level of detail. But in theory, if I'm going to say you have 1 or 2 projects or whatever it might be, our hope is that it's not particularly onerous to keep good, timely records. Getting to the end of the year and trying to go backwards is not easy, and you'll probably underclaim. So, our view is to try and compile records, let's say monthly, worst case perhaps quarterly basis, and it's very hard then for Oz Industry or the ATO to challenge your claims, because at least you can point to things being done on a contemporaneous basis.
And Charlotte just put in here what qualifies as records. Like, is it like what are the records?
They're not prescriptive. I mean, when you think from an Oz Industry and ATO perspective, they just need to see the evidence that things have been actually done. So I think setting out what the purpose of the activity was, what the objective, what the hypothesis is for particular activities, what was actually done, your results, your evaluations, etc. If you've done a literature review or you've spoken to a technology vendor or something, I mean, records can be emails, they can be reports, they can be something that comes in from a consultant, they can be your own documents. There's no prescribed format. Oz Industry does have some guidance, I guess, on their website. So you can have a look at what they're interested in. But again, they're not prescriptive because every business is going to be run differently. But I think, for us, just implementing good process early on and using that on a regular basis, should put you in a pretty strong position.
And just 2 quick questions that are there about what qualifies. So does it support the patenting process, and does it directly support R&D TI accountancy?
If only. Well, I'll go to the last one and say no. No. So it doesn't cover our fees. No, and hasn't ever. And the first one,
patenting. Look, it doesn't actually cover costs of going through the patenting process. You can include some cost of maintaining patents into it if that's something that you need to do, because you still might be working on your R&D project, but it doesn't cover the cost of the legals and all of that goes into a patenting process.
So a landscape review, so for instance, in terms of preparing for a project and working out, I guess, the scope of your activity, so to the extent that you undertake a landscape review, that would also qualify. But otherwise, Nick's spot on.
Okay. And if monies are provided to a business as a federal government grant, is this work still R&D claimable?
And that's probably where I noted before that there's an interaction between grants and R&D. I think if you work on the premise that generally you can't double dip on the same dollar, tends to say, well, it's usually one or the other, but there are a couple of exceptions to the rule where you can actually get a grant funding from like a CRC, which is a research centre, and also claim R&D. So there's a few areas that you can do it, but as a general rule, no, you can't claim on the same dollar to different incentives.
Yeah. Okay. And just a couple more questions that are coming in. I'll just jump on them as they come in, because otherwise they build up and I miss them. So if somebody thinks they're eligible, where's the best place to start? Is it with an accountant? And what do you estimate the setup cost might be?
Nick,
you take that, Alan. Yeah,
no, happy to. Look, I think genuinely, I think there's some pretty good information now available through Oz Industry. So Oz Industry looks at the eligibility of the activities, and the ATO the eligibility of you as a business, which you should be okay, and then also in terms of expenditure. There are briefing sessions that Oz Industry run. There's a range of things. I would express some wariness about dealing with your accountants. I mean, God, Nick and I, between us, have been doing this probably for, I'm going to say 35 years. So there are specialist teams around, and there are lots of different practices around. We work with startups all the way through the big guys, but there are lots of different firms around. If you go to your accountant, they may have some understanding, but very importantly, getting the right structure. So as Nick said, you have to be a company, so you can't have a trust applying. Costs qualify from the date of incorporation. You need costs, obviously running through the company. I might jump to the next question actually about sorry, it's just moved. The co-founder
has used R&D to pay for their initial shares. How can this be claimed?
Yeah, well, it can't be if I understand that correctly. So, the company has to incur the cost, and so effectively, a swap for shares is not eligible. So understanding those matters. So understanding the complexities of the structure, where does the IP sit? Do you have access to it? Who's actually bearing the cost? Those sorts of things are important. So I think talking to an R&D specialist, it's worth saying that a very high percentage, and I'm going to say about 90% of that order, of all claimants use an R&D tax consultant, right?
Yep.
Which I find slightly surprising, but there are many out there doing it. And to give you a sense, there are about 12,000 companies that claim, and about 80% of those are smaller businesses claiming the non-refundable offset. So, there are thousands of companies, there's probably thousands more that could claim. The other part of the question was around the setup cost. I don't think, there's the claim cost, but I think in terms of, working out records and that, our approach would be to look at what you do. I think it's infinitely better for us to work with the records that you keep, because then they're truer to your processes and systems. And so if you are subject to review by Oz Industry or the ATO, they can see that sort of integrity. So better than an R&D consultant coming along at the end of the year and trying to impose something on you. So maybe a little bit of work to just make sure you've got the right records in place, but that's certainly not a significant cost. And for me, R&D tax, and well, particularly if you're getting 43.5 cents back, is good value, but it should be just a good standard operating, sort of practice as well.
Okay. And quick question: what about if a company has stopped trading and been wound up or in admin? Surely on the R&D claim is only valid if the company is still a going concern.
That's an interesting point. I'd worked a lot in the UK, and you had to be a going concern to be able to claim R&D. They actually cut it off. Here in Australia, because it's quite retrospective, if you incurred the cost at the time, there may be a discussion where it's still an eligible deduction. Those costs were, and you can think about what happens to the refund, because the company's still entitled to it if it's happened. So even though they might be a going concern now, at the time when they were doing R&D, they're still actually generally entitled. So it's one that you want to get advice on, but it doesn't count you out.
Yeah, I think in terms of lodging your tax return, so if there's a final tax return to be lodged by the entity, then the R&D claim will be part of that return. So yeah, the cash would go somewhere.
Okay, and then we had a few questions in there just around the timing for applications, and I think you've touched a bit on the responsibilities piece, but Alan, but maybe if we look at the timing and then anything else we sort of need to add on that responsibilities for companies applying.
Yeah, well, look, I mean, in terms of the application process, as Nick said, it's obviously linked to your tax return and it is retrospective. So as a smaller business, all businesses have 10 months from the end of the financial year to lodge their application with Oz Industry. So Oz Industry then don't review the applications in terms of eligibility. They'll just make sure the form is basically complete. They'll give you a registration number, and then that registration number needs to go into a schedule that's included as part of the tax return. Now you have 10 months to lodge with Oz Industry, but with many of our refundable clients, we'd be looking to lodge within, say, the first, 2 to 3 months after financial year end, and then you can get your cash shortly thereafter. So in theory, you should be able to get cash by, I would have thought, the end of September or October. So you can do that fairly quickly. Yeah, sorry, Kylie, was that the whole question, or was there something else?
It's more just whether there's anything else. I mean, because we talked a bit about the responsibilities and the record keeping there. I guess any other responsibility.
One other thing actually I will mention is just there's a reference to what we call payments to associates. So if you have a director, for instance, who's consulting into the business and invoicing you for R&D services, you need to have those invoices paid by the end of the year of income.
Okay.
Because we did have concerns in the past where those amounts were probably never going to be paid, but amounts were included in the R&D claims to help boost the claim. So just be aware of the relationship between who's actually involved. If it's a third party independent contractor, well, that's fine, subject to normal provisions. But if it is someone that effectively has a level of influence over the business, so like a director, then those amounts do need to be paid by the end of the year of income. So that's something else to look out for.
Yeah.
Sorry, just quickly, any contracts with third parties as well? So here's a bit of attention, I suppose. You might want to own the results. Well, for our purposes, if you own the results, you're going to have to incur and bear the cost. All right, so then that would mean it's your R&D. But if, for instance, you commission someone else to do R&D on your behalf, well, to do R&D in relation to something else, there is the potential for it to be their claim as opposed to your claim. So understanding the relationship between parties, so who owns it, who pays for it, effectively is important, and that's another matter that the ATO will look at as well.
Okay.
Yeah, I think I just wanted to add to that, Kylie. I think when we have small businesses, founders often work in the business, and they might also take different types of way of getting paid for their time from the business. So if it kind of, you want to consider before year end whether you actually want to draw a salary out of your company, and that's because it's part of your R&D and you earned it, or you want to make that decision, like maybe you don't and it goes through a trust and you might get a distribution. Those kind of considerations all need to happen before the end of your financial year as well. So that planning piece again is really important before you get to your year end.
Yep. Okay.
And Kylie, I'm going to jump back, if you don't mind, to the MVPV, because there has been some ongoing interest in relation to this, and given we have a fair percentage of people from New South Wales. So we have some information from the program manager this morning. So this is fairly live. So in relation to the hold, so all applications submitted to the program remain pending applications at this time. If the program is continued, and we hope it will be, applications received prior to the pause will be assessed and honoured if eligible. Feedback to individuals on their applications can be provided once the process is complete. And so effectively what it means is that they will hold their position effectively in the queue. So again, our hope is that it will continue after a pause. And someone asked about, I said a little while, well, I'm hoping that will be a matter of, let's say, well, 1 to 2 to perhaps 3 months, hopefully no longer.
Okay, great. Okay, so any other questions for anyone? Because I feel like we've covered a lot. Is there anything else you think we've missed, Alan and Nick? There's a lot of information in there.
Yeah, look, and I think from a grant perspective, it's just trying to, and there are databases that you can access as well. There are some you can pay a subscription to. There are others that are, I think it's Grant Connect, which is available on a free basis. So, people talk about there being thousands of grants out there, and yes, there are. But when you basically apply, those filters that apply to you, you'll probably fairly quickly bring that number down. There are certainly certain states around the country. I noted that we had obviously New South Wales, Queensland, Victoria, and South Australia on before. I think all states are fairly progressive in terms of their thinking, and I think perhaps one of the earlier questions that we had about supporting early stage businesses, I think there is quite a consistent push around the country to do more for earlier stage businesses, and I think recognizing that they're an important part of the landscape, and obviously the hope is that they move and grow, and then obviously move through a number of different funding sort of options.
Yeah, great. Anything else that you wanted to add, Nick?
I think I was probably surprised by the poll results. I would have thought more people would be into the R&D tax incentive than grants, just simply because R&D tax isn't competitive. So if you're eligible, you get it. And I would encourage you, if you haven't explored it, potentially do that. And I'm not saying grants are bad, but there can be a lot more intensive and hard work, and you may not get it. So, either way is great funding, but I would encourage you to explore both.
And I just add to that point, in fact, we have had clients, as you'd imagine, that don't end up receiving funding, but they would still say, and particularly with the AC program, I mean, that was probably one of the most intense processes to go through. We had clients that weren't successful, but they still found the whole process productive. So it was the qualification, the opportunity, the scoping the project, the qualification, the feedback, I suppose, from us, from the facilitator, from the committee. It really helped then guide future decisions. So yes, it's unfortunate you don't get the money, but in some instances, there's still effort that's gone in that is useful and productive.
Yeah, that's great. And look, so I mean, I think if there's no other questions, I mean, for everyone that's jumped on the call, thanks so much for joining us today. It's been really great to have so many people on. If you guys want to know more about what we can do, we are just happy to jump on a call and just have that conversation so you can understand more about how we can help. You know, I think that one of the good things the guys are great at here is kind of saying, like, especially with the grants process, if it looks like something that you may not be relevant for you, they're very quick to kind of try and get to that point, so you're not sort of wasting time. And just to understand, you know, what the process could look like for you. So very happy to sort of explain pricing, explain all of that from our point of view. We do focus on how we work with startups. So while we're KPMG and we sound expensive, we're not always. So you feel free to get in touch with me, get in touch with Nick and Alan as needed, and we're happy to help you explore that process more as needed.
And Kylie, can I just add to that? That
Yeah.
you know, our standard process is to invest time to get to a point where we are collectively of a view that you have a project that is eligible and competitive in a grant sense.
Yeah.
So, you know, that's what it's about, because, you know, ultimately it should be a win-win-win, you know, win for the client, win for government in terms of backing a good project. And obviously we're on board as well. So yeah, we invest time to get to a point to understand your business, what you're planning to do, and then looking to identify opportunities. So yeah, happy to work with anyone.
Excellent. Great. Thank you. Thanks, Alan, and thanks, Nick.
So,
Wonderful. Thanks for having us.
Thank you
so much.
Good on you.
Thanks,
Thank you.
everyone.
No worries.
Bye.
Bye-bye.
Bye.